I think that the tech stocks are having their kind of reckoning day. They got these valuations because every pension fund, every fund was just loading the boat and continuing to kind of get into them. And that gave them these nutty valuations that even an Apple had. And still, in my opinion, even with Apple going up on earnings, it's still a little on the pricier side. Now, Meta is starting to become interesting to me. That is definitely seeing a big discount. I love when everyone's hating on a stock because that's usually when the emotion is too bearish and you'll get a snapback. But certainly we are seeing the reckoning, and you saw the Dow, right? I mean, the NASDAQ 100 is barely positive on the month, but the Dow's having its best month in a long time. It tells you there's a rotation of capital going on. I think Meta's in a particular situation, and what's so fascinating about this is to compare it to Snapchat, right? So Snapchat had horrendous earnings as well, dropped like 25, 30%, but then a few days later it rallied back basically to $10, about 30% or so. And initially when Facebook reported just the numbers, the stock traded to 141 from about 130, and then all of a sudden we saw that Zuckerberg was still going to be spending $10 billion, and the stock just tanked, right? So what this tells me is that their core business is still, basically the valuation where we were was fine for the core business. It's this spend crazy kind of atmosphere where the market does not want it. In a bear market, people are not going to give it 10 years to produce, right? In a bear market. Now, in a bull market, what's fascinating is we've seen all these hopes and dreams give crazy valuations. But we have to remember that it's a difference in types of market. And right now, investors are not giving more than a year out. Zuckerberg is being so kind of hard-headed in spending for the metaverse. It's because he sees that their core business is eventually going to slowly disintegrate. And again, we're still talking, probably a decade plus out, but he's kind of building the table. And I said this in a tweet. I said that, if you have that horizon and he builds out the metaverse and actually succeeds, and listen, we should also give him credit. Mark Zuckerberg bought Instagram. People said they overpaid for him. That was a genius move. He bought WhatsApp. They said he overpaid and it was a genius move. So part of it is the market and investors not willing to give him credit and kind of believe in him at this point. And I think part of that too is that he's the controlling shareholder, and therefore it's whatever he wants goes. You don't have a kind of a checks and balances in the system either. And I think that makes investors very, very nervous. But I wouldn't be surprised if in 10 years, the market cap of Meta is more than Apple or any of these other companies if he succeeds. I'm a believer that Apple, as soon as they see that there's money to be made in a massive amount, they will jump in. We heard about it with the electric car. So far nothing's come of that, but their whole ecosystem, I mean, they have this ecosystem with such dedicated investors and clients that inevitably, if there's money to be made, they're going to get involved, and they have the cash on their balance sheet to do it in a major, major way. I mean, talk about a cash cow is the Apple, company just producing so much money. So I think that, again, that's part of Zuckerberg's play here. He's like, I have to get a head start here. My core business, yes, it's going to slowly decline. It's still a great cash cow, but this can fund the next big thing. But again, the problem is it's not paying investors right now, and that's what investors also think. That, I mean, what's going to be amazing here is you're setting it up where their expectations are very minimal, if not zero. And if you just, if let's say there's just some sort of guidance given by the company that in 3 years they'll be producing X amount of revenue from this, that would be earth-shattering to investors. I mean, it's just one of those, honestly, at these levels on Meta, and again, it's not to say it can't go lower. I want everyone watching to make sure you understand that. It could go down to 85, it could go to 80, 75, but at some point, you're going to see a monster snapback in a name like this. The bottom line is whether we get a 50 or 75, and I think the market's pricing in a 75, the market is rallying and we're well off the recent lows on the hope that he's going to pause. So we're not talking about a real pivot in that he would start to cut. That's not going to happen. But the market just wants him to step back for a few months and reevaluate the data for like 2 or 3 months in a row. And so I think that's what the market is hoping for. And if he does do that, I think you see a bounce or a pop in the markets on Friday. If he still talks about raising in December another 50 or 25, I think the market's going to get pretty scared again that he's overdoing it, and you're going to be pushing this market into potential major recession, not just minor. Minor's kind of the base case at this point for me. It's a matter of how bad does it get, because again, we haven't even, he's raised now 375s, probably 4 per move. you could argue that maybe only one of those rate hikes has filtered into the economy at this point. And so there's a lot of filtering that needs to go on, and we have to see where the economy stands at that point. And that's scary to me. I think 50-50 hike would be bullish, but it's the comments afterwards, right? It's the comments of saying, okay, guys, we're going to take a break here for 2 months, let's say, or 3 months and reevaluate. Or does he say, hey, we're going to still keep hiking in December and on and on. And that would be more scary for the market. So in a weird way, I don't even think 50 or 75 is that relevant. Everyone knows something's coming. It's about what he guides, the guidance essentially. Flip over to Bitcoin, and basically what we have on Bitcoin, we had a breakout that occurred about 10 days ago here, right? So we had this beautiful downsloping trend line, and this is something I was expecting. I think last time I was on, I said we might go as high as 22,500, maybe 25 on this pump, but it was all predicated that we would break out of this channel, right? Or this wedge pattern. And that's exactly what we did. And now what you're getting here after we got this 2-bar move up, we're basically seeing sideways chop. Well, as of now, that sideways chop is called bullish consolidation. And what's interesting is it's consolidating into the Fed on Wednesday. So my guess is we're going to stay sideways choppy into the Fed on Wednesday. And then you're either going to see the most probable outcome, which will be a move up, or if the probabilities fail, then you'd see the downside move. But I would favor the upside with a target here of around 22,500 near term. Maybe max upside would be 25 over the next month or so into year end. I still think that they're working with yesterday's news in terms of the inflation levels. I've been very shocked, to be honest, that they haven't discounted the strong jobs numbers more. Maybe it's just because the inflation data has stayed so strong that they're willing to not play into the jobs data being a lagging indicator. But I do think that at this stage, they're going to find themselves, and you saw, I mean, there was like $1 trillion that investors had kind of squirreled away for spending during COVID and after COVID here, and they paid down credit card debt. If you look at the recent credit card numbers, credit card debt is soaring again. And so what you're seeing is an investor or the citizens of the US at least that are at a point where they're getting back to their levels of debt that they were, and they will have to be cut off, or they will cut themselves off at some point if the economy starts to weaken significantly. So I am concerned that I think the Fed again is going to overdo it, just like they overdid it with stimulus and thinking it was transitory. I think they're going to overdo it here and then have to play catch up. And honestly, wouldn't shock me to see interest rates go down in late 2023 or early. So as we get into November, and this, I mean, to be honest, a lot of this, and I'll show my chart here, a lot of this is going to be predicated on what the Fed does, just like you said. And so note, the one thing that I'm kind of eyeing is the fact that if we zoom out on this S&P chart, you have this trend line that's sloping up and then this little bit of an area right here. And so we're right into a decent resistance line right here. Now, if the Fed says the right things, we could pop as high as this downsloping trend line, which would be around just over 4,100 on the S&P 500. But I am concerned that we've already had a big rally up. If the Fed, again, doesn't kind of give the market that pause after a hike, then I think we're headed very quickly to the downside. And it still concerns me, honestly, that we haven't even retested the pre-COVID highs, right? The February 2020 highs on this market. We came close, but we didn't get there. So for me, I'm more inclined to think that it'll be a whippy November, but it wouldn't shock me if at some point we see a down November overall.